Welcome to Taking Care of Lady Business, where we put the business back in lady business. Hosted by Jennifer Justice, founder and CEO of the Justice Department, a management strategy and law firm that works with female and woke male entrepreneurs, executives, talent, brands, and creatives to build and maximize their wealth, focusing in the areas of tech, consumer product, finance, media, entertainment, and fashion. Jennifer interviews entrepreneurial women who have done it all, who will be sharing their secrets on all things business, especially as a woman. These highly successful women will share strategies and insights, including what not to do and what it takes to win. And now, here's your host, Jennifer Justice.
Hi, this is JJ, the host of this podcast, Taking Care of Lady Business. If you're here, you know my passion for making women rich. Did you know that men are 4 times more likely than women to negotiate their compensation packages? And that women are leaving about $1.5 million on the table by the time they're 60 by not negotiating? That's a lot of money, and I want it to stop. So I'm launching a course called Be the Boss of Your Career to show you how to get what you deserve. Our first live session is May 3rd, so go to www.thejusticedept.com to sign up for more information. I look forward to seeing you there and helping you get rich. Thanks to MedJet for supporting the Lady Business podcast. If you're hospitalized or your security is threatened while traveling, they can get you home. I'm a MedJet member and have been for years. Everyone who travels should be. Enroll before your next trip at medjet.com. Hello, everyone. Welcome to this episode of Taking Care of Lady Business. I'm Jennifer Justice. Today, we have the lovely Kimmy Scotti. She is the CEO and founder of Neon. Hi, how are you?
Hi, thank you so much for having me. I'm so excited to be here.
So Neon is a VC, and do you even call yourselves, is there CEOs in VC? I mean,
Really am a managing partner or general
Yeah.
partner, but it's just, I mean, having been a CEO, it's a CEO job.
Yeah. It's so funny, like, if you're in a nonprofit, it's an executive director. And if you're in like a
Totally.
finance, there's managing directors.
Yeah.
Anyway, so these are the kinds of things that I like to talk about because they're like, everybody feels like a stupid question. So I'll ask the stupid question and then everyone can feel okay.
No, it's so true. So much of being in an industry and feeling like you belong somewhere is actually just knowing the industry's jargon.
Yeah.
And actually one of my like deep passions is teaching other women about investing. And I always make sure to teach them also the jargon around it, because
Yes.
it's actually what helps you sort of jump over that imposter syndrome that's so prevalent for women.
Which is exactly why you are on this podcast today, because I know how much you love to help women, advocate for women, educate them on investing. I saw you recently at a female founders collective thing, and I was writing down notes, and I've been in like business forever. And I was like, oh my God, I never thought about that. Like, and used it for something that I'm working on. So let's start by talking about Neon and your background and how you got here.
Yeah, amazing. So it's so funny because if you asked me at, 14 years old or 12 years old, if I thought I'd be an investor, I would have been like, no, like I hate math class. Like you're insane. And so it's so funny that this is where I ended up, but it's actually obviously like you have to have the like baseline of being able to do all the venture math, but it's so much less about that than it is about people and companies and their and underlying operations and all, and actually like the operating companies, and so much less about being in a spreadsheet, even though you have to be in a lot of spreadsheets as well. That's like, there's always work you love doing that you do, and always, unless, there's some work that you don't love doing that you do as well. But how did I get here? Really, I took the founder path into venture. So I've always been an entrepreneur. I started my first company at 15. I built that all the way through college. I had a jewelry line and went to FIT here in New York, where I started studying jewelry design, and then quickly realized that everyone around me had like a more natural talent for design than I did. I would describe myself as crafty, not artistic, which is it's so interesting because I was around all these people with like really raw talent on, on the artistic front.
Mhm.
And then they all lacked the same thing. they were not commercial, not naturally. And I am naturally commercial. And I realized very quickly that what I loved about building my jewelry business was the business. I loved selling things and, aligning to a retailer and figuring out what it is that they sold and what of my line sort of fit into their assortment and that piece of it. And I was actually just like a lot less excited about just the raw design, even though I love even today to make things with my hands.
Wait, so
And so
that's the company you had at 15 years old?
yeah, a jewelry business.
All
Yeah,
through college.
all through college for
That's,
7 years.
oh my
Yeah.
God.
And I was selling the product in the Bloomingdale's in New York by the time I left college. It's
Oh
so
my God.
crazy. Yeah. And so I really had this, interesting kind of like a revelation at 18, having been 3 years into building my company. And it was that I'm a natural commercial animal, and it doesn't necessarily have to be about design for me. And I'm so glad I figured that out because it's sort of moved me to where I am today. So I actually ended up at school switching into the business side of FIT. First, advertising and marketing communications, and then production management. And production management at FIT, I feel like production is one of those words that means something in every different industry. At FIT and in fashion, it's like literally mass production of soft goods, right?
Yeah.
And so, how do you set up a factory to make this jacket? How do what does that look like? Which machines are required, right? And so, if the designer designs something with like all these princess line seams and everything else, can you cost it effectively? Like, can you make this thing effectively for commercial value versus do you have to kind of, make the design a little more manufacturable,
Mm-hmm.
if that's even a word. And so it's a really interesting dynamic because it's those two skill sets are still the two skill sets I think drive my everyday, which is how do you create demand for a product? And then how do you, on the other hand, build up your operations such that you can deliver on that demand,
Mm-hmm.
right? That's what I spent my education doing. That's still what I end up talking about every day. I just got off of a conversation just now, helping someone understand how to build a margin bridge. That was specific to their operations and their manufacturing process and their COGS, right?
And
It's the
so
same
if
stuff.
people like me who don't know what a margin bridge is, what is a margin bridge?
Yeah. So it's like, where's your margin today? And then this is the margin you're sort of saying you're going to get to
Right.
tomorrow or a year from now. And all of the pieces of that. What does that look like? Are you saving, 5% on your COGS because you're hitting some new scale that's going to allow you to access lower costs, or are you moving your factory and that's going to let you lower your costs? Are you saving on customer service because you're moving into automation? That's a piece of margin. And so like, how do you bridge the gap between where you are today and where you are tomorrow? And sort of showing that visibly is a margin bridge.
Right. Got it. Love it. See, learn something new
Yeah.
every day. It's not going to be the last
Yes.
thing I learned from you today. I know
We hope that this is not a call about margin bridges, but
that. It's going to be
it's
podcast, margin bridges. People are like, what?
yeah, exactly. The most boring podcast of all time. So then I go from FIT basically building my little jewelry brand Mims. And then I ended up at a family office in New York that was actually doing something unique, which they were building and incubating companies. And I basically jumped in to build and incubate companies with the principal there. It's a really interesting learning experience. I was there 8 years and it was like a lot of good, a lot of bad, a lot of ugly. But like one of the things I think is like kind of insane is when I got there, I didn't know what a family office was. I was
Yeah.
like, what kind of family has an office?
Yeah.
Literally. And so, I learned very quickly.
So say
But
what it is, just for people who don't know.
yeah, it's basically the investment management, vehicle for, very wealthy families. If they have enough capital, they hire their own teams to manage that capital.
Yeah.
And this particular family was like a Gen 1 entrepreneur, and he hired a team to also build ideas, which is like a relatively unique thing, I think, in the family
Yeah.
office world. Mhm. So anyway, so ended up co-founding a number of companies while I was there. Most importantly was a prescription affordability company, which was later exited in 2015. And then I actually went to build a venture fund with a group of partners who I adore, that I had a lot of respect for their previous venture experience. And so I ended up co-founding 8VC, a venture fund out of San Francisco, now actually also out of Austin, Texas. And so I ended up getting my real investing chops building a venture fund, which is also a pretty unique experience. And so today, so I spun out of 8VC end of last year, October 1st, actually. And so just a few months later, I'm actually working towards my first, close of my own venture fund. So I'm so excited. And that's what Neon is. Neon is a venture capital fund focused on early to early growth investing in mainly the overlap between healthcare and consumer.
That is fascinating. So you really never worked for somebody else, I mean, I
Yeah.
guess the family office, right? But not
Yeah.
the
Like
big
that, there was
corporation,
having,
and
yeah,
that's
no,
amazing.
I
Yeah.
know. It's so funny. I was having this conversation with, do you know Piera Gallardi, who's the founder of Refinery 29 and 29 Rooms? And she's like such an
Oh, Pierre.
amazing,
Yeah, yeah, yeah. Pierre's very good
Piera.
friend
Yeah.
and the client.
Yeah.
Yeah. Yeah.
Yeah. Oh, she is? Oh,
Yeah.
amazing. I love her. And
Yeah.
so, I recently met her last year and we were like sat next to each other at this great dinner. And she described herself as unemployable. And like, that's why she has to be an entrepreneur. And I feel exactly the same as that.
Oh, so me too. I mean, even though I
Yeah.
have worked for other people, I feel the exact same way. Yeah.
I'm like unmanageable, unemployable. I'd be a nightmare. I could be a nightmare employee.
Well, you know what? What's so great about being honest about that, and even like sometimes a little vulnerable about that, because that, some people might think that that's like a bad thing, right? Is
No.
that there are women listening going, I'm just always have a problem when I'm working for other people. Like I can't, you know
Yeah.
what I mean? So it's fine. You can join us.
Yeah.
Hashtag unemployables.
Yeah. I love it. There's this great George Bernard Shaw quote that says, I'm going to get it wrong, but it's like all progress is created by the unreasonable man, that
Mhm.
reasonable people kind of bend to the world around them, but unreasonable men make the world sort of bend to him or her. And that's not exactly the quote, but that's the point of the quote. And it's
Yeah.
about this being unreasonable. And I think of that all the time. I think of myself as unreasonable.
Yeah. Yeah.
Yeah.
Well, good. That's a good thing. Again,
Yeah.
it's a
Yeah.
positive quality. So talk a little bit about what you invest in, right? Because like we all hear these statistics, only 2% of women get venture funding, and it's kind of been the same, and hasn't really changed. So what I hear a lot are women saying, well, I went to these women and they didn't invest. But that's not
Mhm.
really how it works, right? So can you
Yeah.
talk about that process of like how you hone in and have kind of
Yeah.
a thesis?
Yeah. So this is a great question. So where I spend my time is investing. I describe it as the overlap between healthcare and consumer. But what that really to me means is that it's patient centric, regardless of who is actually paying for a product, because we all have different sort of surface area with different parts of the healthcare system, right? Sometimes we buy something and it's cash pay, right? And we buy it. That means we pay for it in cash. It's elective, let's say it's your Botox, right? That's
Yeah.
healthcare. You're going to a dermatologist who is a doctor, hopefully, and you're deciding that this is like an elective thing that you want to pay for. Some things are insurance pay, right? You have twins, I have twins. We probably had those in hospitals. Hopefully your insurance paid for it because we're in America and otherwise it'd be wildly expensive. And so,
Yes.
hopefully we're lucky enough to be insured and have insurance kick in. That's also a part of the healthcare system. Sometimes something's employer paid, right? Your employer elects to make something a benefit, they're contributing to that. Maybe it's your gym membership. Maybe I've seen actually recently aesthetics paid for by employers in particular sectors. And so I think these things are, there's sort of all different payers in the healthcare system. Sometimes it's government pays for things, right?
Right.
And so regardless of who's paying, look for companies that put the patient at the center of that care and make sure that the outcomes and the value are being driven to that patient. And I think that's really important. And
Mhm.
so for something like, I'm really proud of my investment in health. is a maternal fetal medicine company. They inject midwifery into the traditional OB practice. So some of your visits are with a midwife, some of your visits are with an OB, and then your baby is delivered in a hospital. I think when we hear things like midwife, we think of like delivering a baby in a bathtub, in a birth center or in your house or whatever. That is not necessarily, have to be true. And it turns out when you bring a midwife or a doula into your delivery, you improve a lot of the experience. There's lower intervention, there's lower C-section rates, there's higher APGAR scores for the infant. Those are like the health scores for babies a minute after they're born, that kind of thing. And so you can improve the experience. You can also remove cost from the experience in a lot of ways. And I think that sort of exemplifies, something patient-centric. Those are all things the mother would want. Her experience is improved, the baby is healthier. And I think that that's like sort of exemplary of the type of investment I like to make. Now, that's a women's health company. I don't always invest in women's health. I also kind of hate the phrase women's health because all healthcare is women's health, basically. As well. And so it's like kind of silly. It's like, oh, healthcare for girls. It's like sort of pinking razors. It's like pinking healthcare. And I think it's like sort of broadly all healthcare. And I sort of, have like a special spot for women's health because I think there's so much to be improved there, especially in the US where like all of these sort of maternal mortality rates and C-sections and things that are all moving in the wrong direction. And also we're obviously very much under attack from a policy perspective. Obviously, we're all watching what's going on in Alabama and horrified. You should be horrified. And I think that there's just a lot to improve on this front. So it's top of mind all the time.
So when you came from like a retail background though, how did you land here as your thesis?
It's such a good question. It actually was almost accidental. We were building basically a subscription magazine product with like a discount product underneath it. You could click and buy everything in these magazines on iPad at a discount that we had like pre-negotiated for you. And there were also ads in these magazines. And it ended up that one ad was being used like kind of more than everything else. And it was a prescription discount product. And there were obviously a number of steps in between, but we ultimately pivoted out of the magazine business and into the prescription medication business and, creating a prescription affordability product ultimately. And that opened my eyes to this huge opportunity in building in healthcare and creating change in that space. And then that sort of led me to investing in healthcare. And, I think it's important work. I think it's really rewarding work. And it's a place where a lot of my skill set, sort of can better people's lives.
Right.
I think they also create a lot of value for investors. Like these things go hand in hand. I think a lot of like things I say sound like I mean impact investing, but actually I'm very focused on like returns driven investing. So purely financial.
I love that, actually. I was going to ask you another question, but I want to go there because we know as women, it's like, oh, wanting money is such a dirty thing. And, it's like all of this has been just portrayed on us like we're not supposed to love that and we're not supposed to care about it. But a friend of mine who I think, Lindsay from the Helm, she says this one quote, women are always asked to donate money to charities and men are asked to like invest, right? And only one of them actually makes a return on that. So wouldn't you want the return so you can invest twice or three times as much to the charitable organization, right? And so when you say that, like, have you ever gotten pushback with that? I mean, you're a VC, but like amongst like women's or like just in general as a woman saying like, I want to make a lot of money for people. Like, is there anything in there that's like, not pushback, but
Yeah. Like a judgment around it.
Yeah,
It's interesting. I'm sure that it has existed and I've not, exactly. And I've not like exactly felt it that way. But where I do get it is actually the other way. It's more of like a bias than it is a pushback where someone will be like, oh, you're an impact investor. Or, just amongst learning that I'm a woman and an investor. Oh, you invest in women. That's what, oh, you have like a gender specific mandate. I'm like, no, I don't actually. And I have to say, I have felt judgment for that. Well, you're a woman, so you should invest in women. And that judgment comes from not men, it comes from other women, which I think is really interesting. And I invest tons in female founders. Like I have
Yeah.
a number of female founders in my portfolio, both on the ABC side and now already on the Neon side, and also my personal, angel investments. And I think the superpower of being a woman who invests, and we should all, hope to invest and learn it and, and sort of, take this kind of risk, I think, so long as it's comfortable for you,
Yeah.
obviously. But we should be comfortable with the language. We should be comfortable with sort of understanding how to invest and the language of documents and what that looks like and what terms are. And that's something I'm really passionate about, is getting women to learn all of that. But you know, by virtue of being a woman, I see more female founders. So I
Yeah.
see more opportunity in that space. And I think that's a superpower of being a woman who invests, right? That they come to you because of the reason you're talking about. Maybe they're getting a lot of pushback from male investors, or maybe they don't have the network to get to the meeting with that male investor, but someone leads them to me, or another woman like me. And, we're lucky to get the look to see those deals. And then I try to always take meetings with female founders when they're requested, because I think they get told no at a higher rate women entrepreneurs than male entrepreneurs. And so even if they're not a fit for my thesis, I always try to take even a quick introductory call so I can hear what it is they're looking for and what kind of investor they're looking for, and then get them where they're going and introduce them to another investor that might make sense for them, man or woman.
Yeah.
Right.
Yeah. So, you were hit on, and I know that you do this a lot in trying to get women, you said it earlier, women to start investing and demystify everything. Like, what are some of the most basic things that you can give, to women to help them understand investing?
So one of the most basic things you can give them is the language.
Right.
How often have you seen an email come into your inbox? I'm raising a seed round of, $800,000 for my SaaS, blah, blah, blah company, whatever it is. How much jargon is in that sentence?
Yeah.
Even with the propensity to invest, right? Even if you had all the capital and you have the access, right? Because that deal is coming into your inbox from, hopefully someone if you don't understand that sentence, are you going to engage? And so what ends up happening is women say no because they don't know what all of that means, and then they feel like they're not, like, it's not their place to do it, and so they sort of delegate investing that they do actually engage in to like some man on their, at their bank that helps them manage their money, or, if they have a family office, somebody that runs that family office, or their dad or their husband. And that's something I hear all the time. And I'm like really passionate about giving women the tools to at least look at that deal and say, is this interesting to me?
Mhm.
And also know what all of that means. Oh, a seed round, this is probably their first round of financing. Oh, it's a SaaS, company. It's this, it's that, whatever the details are, so that they know what they're looking at when it shows up, to be able to make a quick assessment of if they should or shouldn't even engage in the conversation. And I think like that's something really important and really easy that I could teach a woman in like a short period of time. And it's something actually we're doing through our parallel fund, Neon Pink. We have an only women investing platform that is free for them, that helps them learn about investing while they're investing.
Amazing. Talk more about that.
So this is part of the larger fund. So it's actually invested in everything Neon's invested in. And it's a subset of those investors that are, they're all women. So it's a really kind of safe community space for them to be able to ask questions that they might feel silly asking somebody else, or asking in a more mixed audience. And so the quarterly call is half the call a founder we've already invested in talks about their company. So no one's making an investment decision.
Mhm.
And half the call, I talk about the deal. How did I underwrite the market, and size the market? Why do I think it's interesting? Like, why did I think that was interesting? How did I price the deal? This was the price per share. This is the type of security this is written on. This is what the docs look like. These are what the terms were. Did I take a board seat or not? Why? What are my goals for the investment that would lead me to invest again? All of the things that help you understand sort of the anatomy of, of a deal.
Right. So, and those people are already LPs in your fund?
They're LPs in the women's fund. Some of them are
Okay.
LPs in both, but
Okay,
these
got
are,
it.
yeah. And also for everybody at home, an LP is an investor in a fund. It's more jargon, right?
A limited
And
partner stands for.
yeah, it means limited partner, exactly. But when we say it, it means they're investors in the fund. And then
And
you call me a GP, right? I'm a manager of the fund. I'm a
right.
general partner.
At what level in what stage do you guys invest?
So we start at seed, but our main business is investing and leading Series A's. And then we'll often follow on to those in the Series A's into their future rounds, so B's and beyond, but only for companies we're in the A's of.
Yeah, because I find that is so confusing. People like, what's an angel investor versus a pre-seed versus a
Yeah.
seed? Like, can you talk a
Yeah.
little bit about the differences in those?
Yeah, some of these things, by the way, blend together a bit, which is
Yeah,
what makes it confusing, right? An angel investor is an individual investor without a platform. So, like, if I write a check myself, that's not from my venture fund, I'm making an angel investment, right? And you can do that into any round, but it's often into early rounds, right? It's
right.
often into a seed round or a friends and family round or a pre-seed round, that kind of thing. Then there's like a bunch of stuff that blurs together. There's pre-seed and seed, which can basically be the same thing. Some people start, when they raise their first round of financing, they call it pre-seed. Maybe they're pre-product or, pre-launch. And, maybe it's just their first round of financing. It's,
Right.
it's possible it's not. And so this is what makes it so confusing. It's not like there's no hard lines about this.
Yeah.
It's really the first and the second and the third round of financing is like, you could kind of call it that. But pre-seed, usually it's ahead of launch or ahead of the product being finished. Seed, the product is usually finished and maybe it's launched and there's some revenue, or maybe it's not. It could be pre-launch. And then you get to your Series A. That's usually your first like real institutional round of financing. There's usually something there, to sort of understand about the business. Maybe there's a bit of revenue, maybe there's a customer or two, or maybe there's a design partner, who's a customer, something like that.
Yeah, it's so convoluted. And I started hearing about like avocado seeds and then like sunflower. I was like, okay, I can't. This is like
Oh,
ridiculous.
stop.
So I was like,
Yeah.
one, two, three. I'm raising some
Yeah.
money now. I need a little bit more. Okay, now I got to
Yeah.
grow it. Okay, I
Yeah.
love it.
And then you see like lettered rounds of financing, like Series M. I'm like, this is insane. Should we just stop lettering them at this point?
And somebody was telling me about, and then it goes back to like a one, two, three, like a D1, D2. I was like, what the hell? Just raise
Yeah,
the money.
I've not even seen
Um,
one.
I
Yeah.
love that. I love that you're doing all this and it's so important. And, it does help, people get in and to get to see because, look, there's a lot of risk, but there could be a lot of reward, right?
Totally. And often for women, we're very naturally commercial. We interface with the economy all day, right? You know what the price of a gallon of milk is. My husband likely does not, right? It's just the
Let's ask
truth.
him.
Like, oh, I literally sometimes I will ask him, like, what do you think a gallon of milk costs? And he'll be like $2. I'm like, it's like $14 the organic milk, whatever. It's like, we pay like, I don't know, 7.20 a half gallon, right? So,
Yeah,
and because you're buying the same
I
stuff.
know.
Yeah, but a lot of men don't know things like that. Like some men do, but it's like a point that they make to know about these things, and we just kind of naturally know, right?
True.
And women generally naturally know this kind of information. And so we have this like really natural commercial sense. And I think it makes us, really compelling in, potential investors.
Mhm.
And you also identify trends really well, or lots of women do. And I think if you're going to identify a trend and then you're going to personally, get involved in that trend, whether it's like, let's say it's like a dance fitness class, like we're forward space investors,
Yeah.
right? You were the first customer in the door and learned that you're obsessed with that business and you think everyone else is going to like it. And then you start telling your friends and then you start talking about it on your Instagram and then you get your company to do a buyout, whatever, why not invest in that thing and engage, in sort of the growth of that business, right? You identified it, enjoy, that your support is helping it scale. And so I think I think for for women, I think a lot of like early investing even that they do could just be things they like, right? Or
Yeah.
things they really use, right? You know, we've all made the joke, oh, I buy so much Aquaphor, I should really buy stock, right?
Yeah,
Buy stock.
exactly.
Go and
No,
buy it.
that's
You
such
do
a good
use it.
point.
You know it's the best.
Yeah, I tell my kids to have a little green light account, and it's like, okay, well, what do we invest in? I'm like, what do you use every day? You know,
Mhm.
oh, we like, we're on YouTube, Google, great. We like, we play Roblox, great. Although the stock's not doing so well. We think Tesla's a cool company. Okay, great. All of our products are Apple. What do you buy? You know what I mean? And it's like, let's start there and see. And to your point about individually investing, in like a forward space, let's say, if you're going to go there all the time, you're already spending money. Why not invest? And then maybe you can even get some of that money back, if not all of it,
Totally.
times the multiple. Yeah.
Yeah, I always like one of like I think it's like kind of a funny detail is like I'm a Hill House investor. I led the seed, I led the A, I led the B, and I'm obsessed with the business. I'm literally its number one customer.
Yeah.
Literally.
In
I'm head to
fact,
toe
she's
with the
wearing
brand.
one right now, ladies and
I
gentlemen.
am. We're not
That
just,
is, yeah,
we're not just nap
that's her
dresses
jacket.
anymore. Yeah,
Yeah.
we're in like full fashion. I have the whole suit on. There's a skirt. And I think that I was a top customer before I invested in the company.
Yeah.
And, I like, who knows the product better than me? I know it so well. I'm obsessed with it. I'm like really passionate about the business and the brand and the founder. And, I've been sort of along for the whole ride as a customer and then as an investor and then, as a board member and everything else. And I think there's a lot of sort of analogous, women have other like analogous things in their life that they are obsessed with that maybe they should engage in from an investment perspective.
Yeah. That is amazing. I mean, it really like breaks it down into something that's like so practical, and we love to be practical, that it just makes so much more sense, right?
Yeah.
Because so
Mhm.
often people are like, oh, I don't know what the business, and well, you like it, you'll spend money on it.
Yeah.
So yeah,
Yeah, and then also then like use that interest you have in it to sort of look at the competitive market, right? See what else is out there. Now you're comparing this company to other things like it. Do you still like it? Right? Do you still think that's the best investment to make? And I think there's just a lot that interest could really drive, right? Your
right.
passion for something could really drive, I think, an opportunity.
Amazing. I
Mhm.
mean, I could talk to you all day because you have so much knowledge and I love your passion, but I know that you actually have to go do work, as well as she also has twins younger than mine.
Yeah,
So,
3-year-old boys.
really in it. Mine are out wandering the streets of New York City because they're out of school, That's what happens.
Do
They're
they
going to
want
be
to watch
11
mine?
next. But, there is one question that we always ask everyone at the end, and that is, what is the worst advice you've ever received?
Okay. This like horrible man that I worked with, he was like worked for one of the companies we built out of the family office, told me that I had to wear navy blue suits and answer to Kimberly. And he was like, he thought it would be better for like my long-term career. And I told him that he could call me Kimberly, but I'd never answer to it.
Yeah. Oh
And
my God,
he was
I
like
love it.
30 years older than me. He was horrible. And it was like, he was also telling it to me and in like an intimidating way, which is, I
Right.
think, so important to know. And I never wore a navy blue suit, not
Good for
once.
you.
And I've never answered to Kimberly, not once, unless my grandmother says it, which is a
Yeah.
whole different thing. And I think it's actually really important to be individual and yourself. And I think it's actually really hard to be an individual as well, because what's kind of our nature, like we like to like blend in, and it's nerve-wracking to stand out, because when you stand out, then you're a lot to pick apart and target and whatever else. And but I think you get farther by being different and being yourself, and
Yeah.
being different is irreplaceable as
Yeah.
well.
Your
Mhm.
authentic self. It always boils down to, on this podcast, it's like I
Yeah.
trusted my gut and I did what I knew how I could, come and be me authentically.
Yeah,
I love it.
exactly.
Thank you everyone for listening to this episode of Taking Care of Lady Business. Until next time, I'm Jennifer Justice.
49 faces looked to him in triumph. Over the last 12 months, they had each taken turns and promoted his business for a week at a time, driving over $987,342 in revenue. What if you had a network of 50 centers of influence who promoted your business every week for a year? Grab your copy of the #1 Amazon best-selling book, The Ultimate Guide to Growing Your Business with a Podcast, at 33% off the Amazon price by going to ultimatepodcastbook.com. Again, that website for 33% off the Amazon price is ultimatepodcastbook.com.